MD Investor channel, the channel where we talk about personal finance, debt, setting goals, achieving goals, living the American dream, um, taking responsibility for our personal finance by increasing our financial intelligence, teaching our children so we can break the cycle of generational poverty. Welcome to another video. Today's video is going to be an awesome video. It's going to be a great video. You're going to learn a lot. Definitely hit the thumbs up, leave a comment. Let your friends know, let your family know there's a place to go where there's real people talking about their personal finance, taking responsibility, learning, and breaking the cycle of generational poverty by not just learning, but taking action. We are learning and we are growing. Here we are on the M1 Finance app. I love this app. It's a robo brokerage that I've been using now for about 6 months. I've used other brokerage. I've used TD Ameritrade, Robinhood, Vanguard, and they all have their different aspects that are good. But this app, I think, takes the cake in terms of definitely for a dividend investor like I am. I just love it. So here we are on the M1 personal app, the M1, the M1 first page. So as you can see, this is our portfolio balance. We started late in November, so from January 2nd, I guess every year they started over. This is what we add. This is what we've been funding it with. This is the market gain, market loss. In percentage form, we're down about 15%, which I don't care too much about because I never plan on selling most of my holdings. Earned dividends, not all of which have been paid. Remember, we've done videos on dividends. So earned dividends are dividends that you have earned because you have bought the company. At least you bought the company before the ex-dividend date. So you've earned it. Not all of them have been paid yet because you don't get paid until a couple of weeks later. You can check that video out on investing terms that you should know. Here's the cash balance. So let's see, where do we start here? First of all, M1 has what they call pie, and you can hear about slices. So it's kind of making you hungry like dessert. But so your portfolio is your pie. So here's my pie. Pie represents 100%. You can see it's 100%. Pie represents 100%. Okay? Your pie is made up of slices. So here you are, my slices. If I hit this, I'll see the slices. My pie is made up of slices. These are the slices. I have 11 different slices, all representing a different portion of the economy. Consumer defensive, healthcare, financials, consumer cyclicals, industrial, utilities, basic materials, technology, energy, real estate, telecommunication. Investing in every portion of the economy. And every slice is kind of its own pie. This is what I mean. So the consumer defensive, if you go here, you see that the consumer defensive, there is, I think, 14. I believe there's 14 holdings here. Not telling me. I thought it told you. Let's see. Let's go down here. Okay, I thought it told you for some reason. Okay, maybe it doesn't. I think it's 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, so there's 14 holdings. Okay. And then they have their own, you set them to the percentage that you would like it to be. I said Philip Morris to be 9%. It's about 8.7%. It's pretty close. Okay, so let's go back to where we were. Okay, so you have your pie and you have your slices. You make your pie the percentage that you want. So I'd like consumer defensive to be 14% of my portfolio. I like healthcare to be 13%. And M1 tries to do that for you automatically. It's called what they call a robo advisor. So it's the 14, very close to this, right? Very close. And each slice, so Abrams defensive, I think would be the right here. They agree right here, okay? The healthcare is here. The financials, you see, it's a little bigger than it should be. It should be within this margin because I set it for 8% and it's almost 11%. That's why it's a little out. That happened because the market dropped maybe last week and I bought a lot of financials. That's why it's out of balance. So anyhow, you get the point. So it's made up of your portfolio is called a pie, and then the individual sectors or individual component of your portfolio is called slices. You can open a M1 portfolio for as little as $100. That's great because one of the barriers to a lot of people investing is it costs too much money. Only people with big money, hundreds of thousands of dollars, millions, can invest. I can't invest for $100. But we talked about it when we did a video on acorns, right? That you can't invest because you don't have the money, and it almost paralyzes you. And we said all we have to do is link whether it's your credit card or your checking account, and then when you bought something, it kind of kept the change and it rounded up to the nearest dollar. So again, a barrier to entry has been removed because it's not that much as $100. And then you set you make your portfolio, you fund it, and then M1 does the rest, right? You said I want 15% to go here, and it go $15 will go here, $10 will go here. That's a great thing about M1. Another great thing about M1 is that it allows you to buy fractional shares. Say, for example, you invest and you start your portfolio with $100. And in your pie, you have Amazon. Amazon is almost like $2,000. You can't, with most normal brokerage, you are not able to buy a share of Amazon because you don't have the $1,800 or $2,000, whatever it is. But with M1, it allows you to buy a fraction of a share. So you'll buy $10 worth of Amazon. You can buy as little as 1/10,000%. 1/10,000 percent. That's a fraction, small fraction you can buy. So that's great. So that allows you to still be able to buy companies as expensive as Amazon or Apple if you don't have enough for one full share. That's one of the advantages of M1. Okay, so we said they talk about pies, right? Say for example you're new to investing, you don't really know much. You don't feel comfortable buying individual stocks. They have what you call professional pie. You go here to the research button, hit that, and you see where it says expert pies. There you go, expert pies. So for example, general investing. Easily create a diversified portfolio and set it to your own personal risk tolerance. These pies are ideal for those who want broad market exposure at a low cost. Sounds like they're talking about ETFs. Want to choose a portfolio based on their risk tolerance, so whether you're conservative or aggressive, or looking to build up a portfolio over time. Okay, let's view the pie. So starting at conservative. So this person is very conservative. They don't want to take a lot of risk. All the way to the other extreme, aggressive. So they give you a little information there. The ultra conservative person, the ultra conservative professional portfolio that M1 has 6 holdings. The dividend yield is just under 2%, and over the last 5 years, it's been yielding about 10.7%. and this is for someone with low risk. What is involved in this ultra-conservative portfolio? Well, let's click it and see what's available to it. Okay, ultra-conservative. Okay, we said it's been up about 10.7% over the last 5 years. Let's look at the profile. The ultra-conservative pie is built for investors with a very low risk tolerance or a short time horizon. So maybe they're going to plan to retire or using the money soon, or that it's very risk averse. Again, 6 holding, the dividend yield just under 2%. The expected ratio is 0.13%. So it's a little expensive. What is the expense ratio? You know that these are not individual stocks. These are like ETFs, because individual stocks, you're not going to be paying any expense ratio. Okay, so there's 6 slices. Again, pie and slices. So the ultra-conservative pie has 6 slices. And here are the 6 slices that are in that. 82% of this ultra-conservative is bonds. See that? iShares 1 to 3 year treasury bond. A bond or lower risk. They're basically government bonds, and they're within 1 to 3 years. So basically, you're lending the government money, they're using it, and they're going to pay you an interest. 82% of that. Okay. If you want to see what's in that, you can hit that. It gives you the share price, the assets under management, 17 billion. The expense ratio is a little expensive, 0.15%. Dividend yield, 1.85%. So not that much yield. There's 101 holdings in there. Okay. So it kind of gives us a little more information. Okay. Let us go back here. So this is the ultra conservative, right? So majority of it is bonds. Okay. There are some stocks in Vanguard, FTSE, developed markets. This is Canada, Europe, and the Pacific region. They do not include the United States, so that's only about 6%. Small caps companies, those are small companies that you probably never heard of. But with small companies, the potential for growth is there. I think a small cap is divided maybe 10 million or less. So this investment track performance of a benchmark index that measures the investment return of small capitalization stocks. Correct. I think small caps might be maybe about $1 billion or less. Or maybe it's less than $1 billion. Less than $1 billion. The fund employs an indexing investment approach designed to track the performance of the CRSP U.S. Small Cap Index, a broadly diversified index of stocks of small U.S. companies. So there's about 1,300 holdings. Okay. Most of it is U.S. stocks. Look at the top holdings. Lados Holdings. Never heard of it. Another one, which is under my picture, you can't really see it. I think it's Zebra. The bottom line is, there's a company that you never heard of. But they may one day blow up, right? And become massively lucrative. As opposed to something like this. The Vanguard S&P 500, which are the large cap companies. This is the price per share. Assets under management, 132 billion. The expense ratio is pretty low. The yield is about 2%. The investment seeks to track the performance of a benchmark index that measures the investment return of large cap stocks. Large cap. So these are your big name that you know. 512 holdings. And mainly U.S. stocks. Top holdings, Apple. So that's S&P 500. So, but that's only a small portion. I mean, it's not letting me see, but I think it's very a small portion. The majority of this ultra-conservative pie is bonds. That's why it makes it very safe. These are pre-made professional bonds. So someone who's not really that comfortable, they'd rather pick something that's been pre-made for them. Let's go to the other extreme, aggressive. This person is okay with taking more risk for the potential of more return. Aggressive. They had 8 holdings here. The dividend yield is about 2.739%. So let's see what's in this aggressive portfolio. The aggressive pie is built for investors with a high risk tolerance or a long time horizon. Okay. 8 holdings again, dividend yield about 2.7%, expense ratio is about 0.05%, not bad. In this aggressive, it's going to be more stocks or equities and less bond, which makes sense because this person is taking more risk. The Vanguard FTSE developed markets. So this is going to be Canada, Europe, Pacific region, no United States, except for United States. That's about 29% of it. Okay, so you can go into it. This is the share for the VEA or the Vanguard FTSE developed markets. Assets under management about 78 billion. The expense ratio is pretty good at 0.05%. Dividend yield about 3.38%. You see how you said here you could add this to the portfolio. You might not like this whole aggressive pre-made pie, but you say, okay, I'll make this Vanguard FTSE developed market. I'll make this a slice of my own pie, and then you can set the percentage to whatever you want. I can make it 2% or 3% or 5%. So you have a lot of flexibility. Okay, so about 3,900 holdings. So you're very diversified. And then again, you can go through. So this is the aggressive pie, pre-made pie. So a lot of stocks. So you have international, right, outside of the U.S. You have U.S. large cap U.S. Small cap U.S. 14%. You have a little bond, not much, about 11%. You have a little real estate. Okay, so you see the difference. Again, pre-made. And you can add this to your portfolio if you would like. And then you can set the percentage. Okay, what if you said, okay, I kind of would like to choose my own, but I'm not really that experienced yet. I don't want to choose my own stocks, but I like to choose my own funds. You go to this button right here. They have funds that you can choose. So a lot of variety, guys. Almost 2,000. S&P 500 from Spider. The Vanguard Total Stock Market. That's a good one. The assets under management, 140 billion. Dividend yield about 2%. So you hit this. See what's in the VTI. Okay. The VTI, each share is about $142. Assets under management, 140 billion. Very low expense ratio and dividend yield about 2.05%. You can add this as a slice to your portfolio, or you can make it your whole portfolio. You can make this 100% of your portfolio. Okay, and you get great diversification. The investment seeks to track the performance of a benchmark index that measures the investment return of the overall stock market. When you say overall stock market, it means total. That's why it has the name Total Stock Market Index. And the holdings, almost 3,600, and it's been around since 2001, so like 19, 20 years. Most of it is U.S. stocks. Okay, top holdings, Microsoft, and I think Apple as well. So these are all funds, and you could create your own pie by either, combination of funds or stocks, right? Look at all these stocks, almost 4,000, okay? And you can use different filters, different market capitalization. You say, okay, I want companies between, you may say you might want companies between 10 billion. I don't know if you'd have to write the word out or the numbers. Yeah, you probably got to put a number then. Market cap between 10 billion and then whatever 40 billion. But you got your point. You can do by PE ratio. You can do by dividend yield. I want stocks with dividend yield between 4.0 and 6.0. See the dividend company that I put dividend yield between 4 and 6%, and then you kind of do your research. So we can remove that filter and look at the sector. There's 186 companies that are in the basic material sector. So you hit that, and you see the companies that are in the basic material sector. Sherwin-Williams, that's a paint company. We know about that. There's 211 companies in the communication sector. AT&T and Verizon, Facebook, Disney. Okay, so you can begin to diversify and really build your own individual pie. It can be a combination of some pre-made pie, some funds, ETFs, some individual stocks. The numbers can be individual to you. So everyone can have a really different portfolio. We may have the same holdings, but the percentage or allocation could be different. Okay, we may both have AT&T, but you have it as 5%, and I could have it as 20%. You get the point. Again, in the energy space, there are 239 companies. Okay, the names that we know: ExxonMobil, Chevron, so on and so forth, BP. Okay, and you can kind of really begin to get your own thing. But until you're comfortable, you may say, until I'm comfortable, until I, get more experience, I'm going to go with the funds. I'm going to go with the pre-made pie, and that's fine too. ETF, a total markets ETF, is fine. As well, a sector ETF, because they have ETF for the entire market, like the VTI, and then you have sector ETF, so an ETF that just tracks energy, a sector ETF that just tracks basic material, a sector ETF that just tracks real estate. So real estate, 243 companies that are in that space, and we could go kind of look around and kind of see. Okay, so let's see what else to tell you. So we did expert pie. You could create your own pie, right? So, for example, you could say, okay, you did create new pie. Create new pie. Okay, so you can say, give me Apple, give me Facebook. Then you go to funds, and you can say, give me VTI, and then you go here to add. Okay, so you go here and you say add. So okay, new pie. You can change the name, right? So it's gonna have 3 slices in there. That's what we just picked, right? We just picked Apple, Facebook, VTI. Okay, we can say edit, and it already gave us the percentage. But you can adjust it. You can say, you know what? I don't want Apple to be that much. I'll only make it 20. So you can go down here to 20%. But then the total is 86. It won't let you save it until it's 100%. So then you say, okay, I will go up and make VTI more to equal 100. Now with the 100, now you can save it. Okay, I'm gonna try not to save it because I don't really need it. You may have saved it. That's fine. Watchlist, stock that you haven't bought, but you kind of want to get more information. You want to follow them and track them. You can do that. So you can put in, whatever. You can put in McDonald's. Put it on your watch list. Just add the portfolio. No, we want to watch it. So you watch it, and then it'll go to your Watchlist. So now we'll go to Watchlist. McDonald's is now added. Okay. So we did extra pie, we did my pie, we did funds, stocks, market news. That's just kind of, like it says. You can kind of look and see. They'll usually give you investment pertinent news. Okay. What else we can show you? Let's see else. Let's go to invest. This is the button that is actually pretty good. It's very motivational. Before we get to that, let me add a couple of things here. See here where it says cash balance. Um, Whenever you get paid dividends, it goes to the cash balance. Whenever you fund your account, it goes here to the cash balance. I think it has to hit. It used to be $10, and then M1 would automatically start buying shares whenever the market is open in your pre-selected criteria, like in the way you set up if you're holding 5% here, 10% here, it'll start doing that. Start doing that. Right now it's about almost 11 o'clock. So I think the market is open. There's two. Let me go down. There's two trading windows. See here? Yes, the morning trading. I think it's at 9 Central, which is like 10 o'clock our time in the East. Morning session, morning trading in progress. Okay, morning trading. So it's buying stock right now. That money here in my cash is being used to buy stocks. Once it's done, it's going to come back down to whatever's left, probably $1 and change. And then there's a second window, a 3 o'clock window for people with the M1 Plus. But the basic window is just the morning window. On your portfolio, say you can hit rebalance. I advise not to hit the rebalance that much. The reason being, when you hit rebalance, say for example, when I said my financials was a little out of whack, a little financial, see here on my pie, it's set at 8, but I'm about at 11%. If I was to hit rebalance, it would sell off some of my financials to bring it down to that 8%. And doing so, and then maybe buy something else that's maybe underweight. Maybe something else is underweight. What that can cause is a taxable event. Remember the video on long-term and short-term capital gains? Long-term capital gains is, I think, if you buy and hold equity for at least a year. Short-term is if it's less than a year. So if you're buying and selling willy-nilly, all those things are creating taxable event, right? You bought the share, you only held it for 3 days or 4 days. We're going to charge you at your normal marginal tax rate, not the long-term capital gains rate. But if you let the M1 algorithm do it for you automatically, you won't activate a taxable event. But if you do it manually and say, no, sell some of the financials, it's too big to bring in that, then you'll get a taxable event, which no one wants, right? Okay, so let's go to the activity button. Before we get to that, it says auto invest. I have my auto invest on, which means that whenever I get paid dividends or I put cash and fund my account, it's going to automatically buy companies in my pre-selected allocation. If you take that off, then you can't take it off. By just clicking it, you'll take it off. And then you can put here, so you take it off, and then I guess you'd have to do it, which defeats the whole purpose. Minimum cash balance. You can set something up also where I don't want you to. the minimum cash balance, and maybe that's $50 or $100. You can put $50. I want you not to buy stock until my cash balance gets to be $50. But that defeats the whole purpose. You don't want a lot of money sitting on the sidelines, right? You don't want $100 sitting on the sideline when it can be buying stocks and and getting dividends. This is one of my favorite buttons in the whole in the old M1 Finance app, the activity button. You hit the activity button and you see any activity there, any deposits, any withdrawals, any dividends. So you see here, I got paid from Apple, and send your email on your phone that you've been paid $1.66 from One Holdings in your M1 Finance. The $1.66, right? Not a lot of money. Nobody's gonna retire and get rich off $1.66. But what it is, it's showing you that you have begun to get financial oxen. If you haven't seen the last video, go check out the last video. Financial oxen. Financial oxen. It's just it's a great concept, and that's what this is. This is money working for me. $1.62 that I didn't have to go work for. Yeah, I know $1.62 is not something that you can live off, but it's a start. Okay, the journey of 10,000 steps begin with one step, so we got to start. So I got paid $1.66 from Apple. So what I'm going to be doing, and you can change the activity type and the date range and so on and so on. So if you just want to put dividend, you can go like this and take it off. You see all the dividends here. You could also change it to different date range. Like I said, I'm going to do a lot of other videos on portfolio updates and so on. So we can go back to the invest, spend. This is M1 has like their own. I get the Visa card. I don't see myself using it now. Then they have something called M1 Borrow, where you're able to borrow against your portfolio. We'll do videos on that as well. So guys, I think that's enough to whet your appetite to let you know about this portfolio. I love it, actually. I think it's a great way to manage your portfolio. It's a great way to get motivated. You can start with only $100. You can buy partial or fractional shares. You have a lot of flexibility in terms of what you pick, whether it is a pre-made professional portfolio or pick your own with a combination of funds and stocks and pre-made portfolio. I think this is a great tool. You guys, like I said, you can start with $100. Let's go to M1 Invest. Learn about it, read about it, watch the videos, rewatch it. I think it's going to be a great tool on your way to personal financial independence, okay? And breaking the cycle of generational poverty. Remember, guys, no matter what information you get, if you don't take action, it's going to do you no good. So remember to stay motivated, stay educated, command your money to grow. This is Wayne Abraham, aka the MD Investor in the house, and I will see you on the next one.